nice April day. I want to welcome John Kirshner from the U.S. Chamber and thank him for joining us today. I'm Eric Spencer, President and CEO of the Greater North Dakota Chamber, and I want to welcome our participants to the special webinar with the U.S. Chamber about the CARES Act and other recently passed federal legislation to help the business community respond to COVID-19. As many of you know, the U.S. Chamber of Commerce has worked closely with the White House, members of Congress, and senior government officials advocating for business on all phases of the COVID-19 response. They're also great partners to us here at GNDC and many of our members because they provide critical and timely information to the business community, which is more important now than ever. Because of the U.S. Chamber's Federation Partner Program, all regular members of the Greater North Dakota Chamber receive a free membership in the U.S. Chamber, so hopefully you're receiving their updates as well as the ones that come from us. Today I'd like to welcome John Kirshner. John is the Congressional and Public Affairs Executive Director for the U.S. Chamber's Midwest region. He's going to be breaking down the finer points of the COVID-19 relief packages that are specific to business. John represents the U.S. Chamber in Iowa, Minnesota, Nebraska, North Dakota, South Dakota, and Wisconsin, and helps develop and implement the Chamber's grassroots, legislative, and political activities in the Midwest. In addition, he works closely with state and local chambers, as well as with members of Congress in the region to further the legislative priorities of the U.S. Chamber. This presentation is interactive, so please, if you have questions, use the Q&A feature on your screen to send them in. Matt Gardner, GNDC's Director of Government Affairs, will be joining us as well to moderate those questions. And last but not least, you may have heard stories about hackers hijacking webinars like this. We have taken precautions against it and don't anticipate it happening. However, if it does, we'll have to end this webinar and reschedule it for another time. And so with that, thanks, John, for joining us. Appreciate it.
Absolutely, Eric. Thanks for having me, and thanks for all that you and Matt and everyone at the GNDC team do for North Dakota. One aside about the hackers and the Zoom bombs is that two of my colleagues, one here in the Midwest and one out in Seattle, have been hacked in these briefings they've been doing around the country to some adult-related hacking and some, I think, Russian-related hacking. So it was kind of curious and interesting. So hopefully that won't happen to us. I've got some slides to run through here, so I'll share my screen as best I can. And what we'll do is I'll walk through kind of what's in the CARES Act. Obviously, this is a big package, $2 trillion, and then we'll talk a little bit about what's in it for business, and we'll talk about a little bit about what's in it for individuals, et cetera. But the bulk of it is directed towards small businesses. So we'll go through that. I will do my best to answer your questions as best I can. However, I will say that sometimes if the questions are a little too prescriptive to your particular instance, I may not have the answer, and I don't want to give any bad answers. So I will often defer you to your lender or your financial advisors, accountants, et cetera. Getting started with this, obviously this is a significant package, $2 trillion. And if you think about that, that's about 10% of our country's GDP, so it's very significant in terms of size. Through the Federal Reserve, there is potential for an additional $4 trillion in support of the economy with the way the Federal Reserve can leverage some of these dollars for future lending as well. This is often referred to as the Phase 3 bill. We'll talk a little bit about Phase 2 at the end. Phase 3 is very focused on businesses, small business in particular. It's very focused on, and I'll mention this several times throughout, but it's very focused on providing liquidity, short-term liquidity for businesses to keep their employees on the payroll, so as not to flood the state unemployment insurance offices, but similarly to keep these businesses engaged. And so when the time comes that the economy does turn around, that these businesses, their doors are open and everyone is able to kind of get this economy going again. Real quick here, automatic payments to individual taxpayers, $1,200 per individual, $2,400 in a joint return, $500 per child. These are phased out for incomes above $75,000. and joint filers of over $150,000. Another significant part of this program is expanded unemployment. What's interesting here is if they have suspended most of the regulations on eligibility as it relates to unemployment, so long as that unemployment is directly related to COVID-19. Sole proprietors, independent contractors, a lot of folks like that who were maybe previously ineligible to file for unemployment are currently eligible, so long, again, as that unemployment is related to COVID-19. The federal government's also kicking in an additional $600 per week on top of your regular state benefit through July 31st. This is money that the state is giving, or the federal government is giving to your states. All your state has to do is raise their hand and say, yes, we'll take it, and that will be added on. This was a point of certainly of discussion, if not of contention, when this was being debated in Washington, because there was a concern of, well, if they're making an extra $600 per week, they might be making more on unemployment than they are working for me. You know, this may disincentivize work. But they're very clear about the eligibility of this ends when an individual can return to work. So as an employer, if you've furloughed or laid off employees, and the time comes where you said, yep, we're opening our doors again, come back to work, their eligibility ends when they are able to return to work. And these benefits are provided through your state unemployment insurance offices the way it currently is. Major provisions for employers. We'll talk a little bit today what's available to all employers. We'll talk briefly what's available to some of the larger employers and mid-sized employers. And the bulk of our time here will be spent talking about small business, self-employed, nonprofits, independent contractors, etc. All employers. Couple good options here. One, payroll taxes. You can delay payment of your employer payroll taxes, the Social Security portion of that, between now and January 1st of 2021. If you choose to do that, 50% will be due on December 31st, 2021, and the remainder will be due on December 31st, 2022. This is not a payroll tax cut. This is merely a delay in the payment. And again, this refers back to what I mentioned earlier about liquidity being the focus of this. In order to provide employers with liquidity to keep employees on the payroll and keep the doors open as much as possible. This option to delay payment of your payroll taxes does not apply to employers who have loans forgiven under the Paycheck Protection Program, which we'll talk about later, which is really the big program in this bill. There are some tax changes as well available to all employers, some relating to net operating loss, some relating to accelerated recovery of AMT credits, interest deductibility, and qualified improvement property fix as well. So there are some tax changes, again, to provide liquidity, not in terms of cutting your taxes, but in terms of offering more liquidity for you as a business. One big part of this program that hasn't been discussed a lot, it was kind of a late addition, and it hasn't been discussed a lot because everyone's talking about the Paycheck Protection Program loan program, but this employee retention credit. And what this is available to employers who are fully or partially shut down or have a 50% drop in gross receipts in a quarter compared to a prior year. And what this is it's a refundable tax credit for 50% of the wages, including employer health plan expenses. So it's not just salary, it's also health plan expenses, paid by the employer up to $10,000 per employee. So if you think about it, it's basically just a $5,000 per employee tax credit that is available to you. This has a couple stipulations for employers with more or less than 100 employees. If you have more than 100 employees, this applies to your employees that are not providing services. So imagine if you have not laid them off, but you're still paying them, but they're not coming into work and they're not able to telework. You're still paying them. This applies to that. If you have less than 100 employees, it applies to all of your employees paid during the eligible period. Again, similar to the deferred payroll taxes, employers are not eligible if they receive a Paycheck Protection Program loan. Mid and large size employers, this bill in total includes $500 billion to the Treasury Department to support loans, loan guarantees, and Federal Reserve credit facilities. Federal Reserve credit facilities, you may have read about them in the paper or seen them on the news. These are things the Federal Reserve is creating, for example, to support commercial paper, money market funds. They do these as a regular course of business when we have a financial crisis. They were used robustly, for example, back in 2008. The bill has $454 billion of that $500 billion is directly for business at large. These are special programs. There are special programs for the airline industry, critical national security businesses that make that up the remainder from the 454 up to the 500 billion that I mentioned earlier. There are going to be some restrictions to go along with this in exchange for accepting the benefit that could include stock buybacks by the company so long as their loans are pending and for an additional year, and limits on increasing executive compensation. So this, again, this bill is focused largely on small businesses. There are some lending opportunities for the mid-sized and larger employers, but right now the bulk of it will be here on this Paycheck Protection Program that we'll talk about now. This is a $349 billion in loans for small business, which generally is less than 500 employees, 501c3 nonprofits, those that are self-employed, sole proprietors, and independent contractors. And these loans are equal to the lesser value of 2.5 months of your average payroll, or $10 million. And one important thing to note is when you're figuring out that average payroll, if you have employees who are making more than $100,000, you can only include up to $100,000 when figuring out those payroll costs. So you get to, it's not that you can't include any of it, you can include up to $100,000, but nothing more than that. What's unique about this program as well is that it is being distributed now through local and national lenders, and I suspect it's happening in your town right now. There are very minimal requirements for these loans, meaning no collateral, no personal guarantee. What makes these loans very enticing and very useful for small businesses is they can convert to a grant equal or up to the amount spent on payroll, rent, interest on mortgage, and utilities for 8 weeks after the origination. So we'll use the $10 million number to make the math easy. If you're approved for a $10 million loan and you use $8 million of that on payroll, rent, interest on your mortgage, and utilities for 8 weeks after the origination, then that portion of that $8 million portion of your loan will be forgiven and turned into a grant. The one caveat there is, of those categories, of that we'll use 8 million, 75% of that needs to be on payroll. The focus here is for employers to keep their employees on the payroll as much as possible, to keep them engaged with the employee-employer relationship, and similarly to keep them off unemployment as much as possible. So if you take $8 million and you spend 75% on that on rent, and the rest of it on payroll, the rest of it on rent, interest on your mortgage, and utilities, that will be converted into a grant and forgiven and not have to be repaid. A couple things to note. Loan forgiveness is reduced proportionally if the employer reduces the number of full-time employees. So if you lay off full-time employees, your forgiveness is going to be reduced proportionally. Loan forgiveness is also reduced if you reduce wages by more than 25%. What is good about this is you can avoid reduction in the forgiveness if you bring these employees back and restore wages generally within 30 days and maintain through June 30. And I believe that 30 days is 30 days from when this bill was signed in law. So that deadline is kind of April 26th. But a lot of employees likely or often have already laid off employees. A lot of employers, has laid off employees prior to this program being. So if you've laid off an employee going back to February 15th related to COVID-19, if you bring them back by August or April 26th, and you maintain that employment through June 30th, you can avoid the reduction in. This is very and incentivizing businesses to access these funds, access this liquidity, and to use that on basically keeping your employees and keeping your business open. So this is a very useful program. It's an SBA program, again, is being run by local and national lenders. That lending began last Friday. I think the guidance didn't come out till Thursday night, so I think it was kind of a slow ramp up last Friday, but I suspect that it's going a little bit more smoothly now that we're early in the week after we've had a couple days under our belt. I know a lot of lending has been going on. I would need to obviously work closely with your accountant, whomever, about before you go in for the loan, make sure you have everything ready to go, because there's a lot of pressure on these lenders to get these out quickly, and the easier you can make it for them, the better. Go to uschamber.com. In terms of what's included, what's excluded in terms of those payroll costs. So there's a lot of great information there. And that's not particularly new. Are these economic industries are available to small businesses, self-employed, independent contractors, and all nonprofits. So what PPP program was small businesses, self-employed, independent contractors, but only 501c3. So a 501c6, like a Chamber of Commerce, does not qualify. They would qualify for an EIDL loan. These also apply to nonprofits, including the faith-based, which is very important here. What this is up to $2 million in a working capital loan for an up to 30-year term. Payments are deferred for up to 1 year. So again, we're trying to get money in your hands, or not we, the federal government's trying to get money in your hands, but delay payment for up to a year. Loan based on your credit scores, no tax returns required. You get up to $200,000 without a personal guarantee, no collateral for less than $25,000. What's new about this program as well is that this program isn't new, but this element is new, that there's up to a $10,000 emergency grant that's paid out within 3 days that does not have to be repaid. So if you apply for an EIDL loan and are not approved, you get up to $10,000 emergency grant, you don't have to give that money back. You keep that. This program interacts with the Paycheck Protection Program, and you would use this one. Well, it interacts with the Paycheck Protection Program in a couple of ways. One, you can avail yourself to both options, but you can't use the money for the same purpose. So if you take out an EIDL loan and you take out a PPP loan, you have to be very careful and thoughtful in terms of where and how you use that money, because you can't use them for the same purposes, but you can use both. So make sure you're talking to your lenders and your accountants and whomever about how to do that. This one is administered directly through the SBA. So you would go to sba.gov and apply for this there, and they are administering it directly online. Paid sick leave. This is from the phase 2 bill. Phase 3, very focused on small businesses. Phase 2, this was much earlier in the process, seems like forever ago, but it wasn't that long ago, was much more focused on employees and for those who could not work to care for themselves or to care for a family member, on how, in terms of how do they get paid. So this, for employers with less than 500 employees, they're required to provide 10 days of paid sick leave if that leave is related to COVID-19. Can be taken when they are sick, quarantined, or have to take care of a quarantined family member or a child due to a school closure. Leave is paid at the regular rate up to $511 per day if you're taking care of yourself. It's paid at the 2/3 of that rate, up to $200 if you're taking care of a family member. This leave is in addition to any other leave that you're already providing. And there is one slight exemption for employers with less than 50 employees. They may be exempt from providing leave related to a child care closure if providing that leave threatens the viability of the business, and paid sick leave is not available if an employee can telework. Similarly, there was some additions, much like paid leave, to paid FMLA. Employers with less than 500 employees are required to provide up to 10 weeks of paid FMLA leave to take care of a child due to school or child care closure, which is basically all of us right now. again, paid at the 2/3 rate up to a maximum of $200 per day and $10,000 in aggregate. Paid FMLA is an addition again to what you're already providing. And that same exemption applies to employers with less than 50 employees. And it will be reimbursed by the federal government up to the maximum. And again, paid leave is not available for an employee who can telework. And I'll just give you some resources here before we get into the Q&A with Matt and Eric. uschamber.com, we're updating it every day. There is a ton of information there that is available. All the different checklists. We have checklists similar to the SB loans in terms of the PPP program. We've got them for the EIDL loans. We've got them for the employee retention credit. We've got them for everything on there. So check out uschamber.com. And specifically for small business resources, uschamber.com/co is a tremendous asset as well, specifically as it relates to small businesses. So with that, I will go back to my screen here, and if we have questions, Matt or Eric, or however you want to do this, I'm available when you are.
All right. Well, thank you, John, for your time and running through that program. So we do, just to remind the people on the call today that on the webinar, if you have a question, use the Q&A down at the bottom to type in your questions, and I will feed those into John. So the first couple questions we got that I think I can answer is the presentation you gave today, John. We plan on posting that on our website so people can use that as a reference because there's a lot of good information in there. So the U.S. John, just a question for you, but is this presentation on the U.S. Chamber webpage as well, website?
I don't know if it's on there, but it is available certainly for people to use as you see fit. So Matt, I know you have a copy and you can share that. Yeah,
so we, early on in the process, the Chamber created a COVID webpage. So that is ndchamber.com/COVID-19. And we have a lot of great resources on there, including U.S. Chamber information as well and links to your website. But we'll also have this presentation available there as well. So the next question I have for you, John. So although a 501c6 is not eligible for the PPP, if you have a 501c3, a foundation attached, but no employees paid out of that foundation, but there are programs funded through it, could you qualify for PPP?
Your 501c3 can qualify for the PPP, but only as it relates to that portion of your organization. So I know some chambers have a foundation or whatever with a 501c3 that would apply, but only the C3 portion of it, not the C6.
So I think the caveat in here, John, is there are no employees paid out of PPP. So that 75% must be paid for employees. Can they pay for any costs outside of employees if there are no employees tied to that C3? You
could pay for the cost. Well, you can pay for, you can use it largely for a lot of things. If you wanted to be reimbursed, it would need to apply to, if you don't have employees, interest on your mortgage, utilities, rent, things of that nature, in order to have that forgiven. But if you're not paying employees, you're likely going to have less forgiven than you would if you were largely paying for employees. But there are options available, yes.
Okay, great. Thanks, John. So next question. How will the paid sick leave get reimbursed?
Yeah, I saw that. I think that is reimbursed. I need to look that up. I think that is reimbursed through payroll taxes, I believe, but I need to verify that. I'm not entirely sure. I saw that, and then it.
That's my understanding, John, is it'll be reimbursed through Social Security taxes.
Yeah.
And if your tax liability for Social Security isn't enough to cover that, they may have to figure out another avenue, I suppose.
Right.
All right, so next question we have here. Can an employer require an employee to use their accrued sick time or PTO or vacation for the sick leave or FMLA when they pay them for sick time or FMLA?
Can an employer require an employee to use their accrued sick time or PTO vacation for the sick leave or FMLA when they pay them for the sick time? Well, I'm not sure I'm understanding this correctly, but these additional paid leave and FMLA are in addition to what you're already providing. So my understanding is it would be after they've used up what you're already providing, then the federal government portion that's reimbursed would kick in. So they would use what you're offering first and then would use the program that the federal government's offering.
Okay. So we have a comment with a question here. If I understand this correctly, it's been referred to, a lot of businesses get referred to their accountants, but you know, this is a new program, so probably information isn't gaining out to them. In other words, punting to accountants isn't always the answer. But you know, instead of being specific with each business on how they can qualify for the loan and what documents they'll need for the bank. So, you know, any thoughts on who the best contact for these individuals are?
Well, it's being certainly as it relates to as it relates to the PPP program that is being administered through your local and national lenders in Bismarck, in Fargo, wherever, Jamestown, wherever you are in North Dakota. That's where it is being administered. They are the ones administering it, so they would be a necessary resource. SBA.gov has a lot of the information there, but I would suspect most businesses don't want to make a financial decision about or a loan or whatever it might be without also involving their accountants or any other financial advisors they have for their business. So I would suspect that the lender is obviously a necessary resource because they're the one who's lending and they are probably going to be the experts. But similarly, I would suspect your accountant is also reading up on this quickly as well. And you need whatever decision you make in terms of which loans, both loans, I would suspect you would need to involve your accountants in that conversation as well, just because it's more than just taking out a loan. Obviously, it affects your entire business, how you're spending it, again, in terms of what can be forgiven. So I would say the lender and accountants should be, you know, speed dial number 1 and 2 that you use for these programs. I don't think you want to consult with one and not the other.
Yeah, no, that makes sense. So I'm going to paraphrase the next one here, but if you're just a startup business and the PPP program is based on last year's payroll, but you didn't start paying employees till 2020, would they still qualify?
Yes, they would still qualify. There is on the uschamber.com/SB loans, that checklist tells you how you can figure out your average payroll. So if you're a new business, then that basically kicks in. If you're a new business and you don't have a full year's worth of payroll, yes, you can still qualify. And we've got that. Rather than go into specifics, we've got that information on that one pager in terms of how do you figure out your payroll costs.
Yeah, very good. So I'm just going to read this one. Can PPP loan proceeds be used for payroll expenses of a sister organization that has the same ownership?
I would suspect that the money is supposed to be used for whatever business, the money should be used for whatever business you're applying for. If that separate organization needs a PPP loan, they should file separately, is my understanding. But again, I would verify with the lender and with your accountant before you take out a loan and try to apply it to more than one organization. I would suspect they would need to be separate because they are separate entities.
Right. So this one deals with the direct payments. If you're a Social Security recipient, would you qualify for the $1,200 a month?
I believe so. Yes, so long as your
payment.
income isn't over 75 or or joint over 150.
Right. Yeah. So we still have some time here with John. If anybody has a quick question.
There's a question that came in on chat and says, do you need to prove inability to pay the employees with other resources?
I don't believe so. I mean, I think if you've, I don't believe so, but I don't know. So I don't want to give you a bad answer on that one.
Okay, that's a good question.
Yeah, it is.
Okay, so we got a few more here. So can a sole proprietor who owns residential property apply for help to pay mortgages on property due to tenants or unable to pay rent as a result of them losing their job?
That might be a little too specific for me. I'm sorry. I don't know that I'm not certain. That's more specific than I'm able to go, and I don't want to give you a bad answer.
Okay.
That'd be a lender question or an accountant question. Trying to keep the banks and accountants in business.
That's understandable. All right, so how will it work if you qualify for both PPP and an SBA disaster loans? No double dipping allowed, so what will the flow look like?
Well, generically, you can apply for both, but again, you can't double dip and pay for the same purpose. So if you apply for the PPP loan, you would want to make sure, in order to maximize your ability to get forgiveness on there, that you would want to focus that money as much as you can on payroll and those other items or whatever, in order to maximize your forgiveness. And then your idle loan you would use for purposes other than payroll, rent on your mortgage, whatever you're getting forgiven. So if you need to pay suppliers, or if you just want to pay all your PPP for payroll and get that all forgiven, then you can use the idle loan to pay your mortgage, to pay for your rent, to pay for utilities and things like that. I mean, there's a variety of ways you could use it. You just need to make sure you know going in how you want to use it, not just generally be like, I need cash, I need liquidity, I'm going to apply for both loans and figure it out later. You'll obviously want to work through with your lender and accountant in terms of where you want to apply the funds for both loans.
Okay, so this next question I received, before this webinar as well, but so if after 2 months and having received the PPP, you then need to let people go, we have to pay back the loan if it was originally used for payroll?
Yes, if you have to let people go and cannot maintain their employment, if you could have to let people go, your forgiveness is going to be reduced as a result of that. Directly, yep.
Because you can still receive the loan, it's the forgiveness for that.
You could
first 8
still
weeks.
receive, yeah, you could take the PPP loan, and it doesn't have to be used on payroll, rent, utilities, interest on your mortgage. It's just if you use it on for those purposes, you have the opportunity for it to be forgiven. So it's not available only for those purposes. Those are just the scenarios under which it can be forgiven.
Yeah, some good questions coming in. So has the Department of Treasury released a process for employees to receive an advance payment of their tax credit for employees for the retention tax credit?
I haven't seen one. Has the Department of Treasury released a process for employers? I think that may be, I don't know if they have. I can track that down for you. I'm not sure how I think that might be a payroll tax credit as well.
Right.
But I'm not sure. I'll have to figure that one out.
So John, with some of these that we're unable to answer today, maybe you get those to me, we'll share them with the group. We'll provide the answers at a later date.
Yep.
That works for you. Okay, so this attendee asks, what's the first thing we should do today after this call? There are so many directions and places to go, but I don't know where to start.
I would say call your accountant and call your lender, because they will understand your business best in terms of what you need. There's a lot of broad, generic information in here, and there is a ton of information here. There's a ton of information that I haven't included, but they would know your specific needs better than anybody. So I would certainly suggest that be your first call to your accountant or to your lender to figure out what is best for you. Like, A, what do you need? B, what's the right way to deliver for that need?
Yeah. There's a lot to this. When you read the whole bill, there's many different facets.
Right. $2 trillion. That's a lot of money. And there's already concerns of that $349 billion for the Paycheck Protection Program. There's already concerns based on how much has already been lended that they're going to run out, and that the president's already talking to congressional leadership about if they run out of money for that, in terms of them coming back and replenishing it and adding more money. And the expectation on the calls that I've been on with members of Congress, that they had to pick a number. You have to put some number in there. So they picked that number, and if they run out, their expectation too is that they're going to go back and replenish that. But there's a lot of money being pushed into this economy to try to keep businesses afloat and try to keep people employed similarly.
Yes. Okay, so with the $1,200 and $2,400 impact payments, will they be taken off the refund due in 2020 if income goes up over the limit after they receive their money?
No, I think it's going to be based on your 2019 filings, or might be 2018 if you haven't filed for 2019 yet. So I would no, it's not. If your pay goes up for some reason, you're not going to have to pay it back. It's based on, I think it must have been your 2018 filings.
Okay, so for some reason this question keeps dropping to the bottom. I'm going to answer it real quick here, but so how would Social Security recipients receive a $1,200 check if they have not had to send in a tax return over the last few years?
I'm not sure logistically how that works. I know early on they were not going to be included, and then there was, some pushback on that, and they did include them. I'm not sure how they're going to figure that out. I mean, I would assume they've got a way to figure that out. They're going to mail them checks, but I'm not sure exactly how that process works. But I know initially they were not going to be included, kind of for that very reason. But my understanding is that they have subsequently been included.
Right. So this question is looking at PPP and SBA loans again, but both loans can be applied for funding, and it'd be used on the expense end where double dipping is not allowed. So businesses will need to have enough cost to use both loan funds without being reimbursed twice.
Right. So the double dipping is on how you use the funds.
Yes.
And so again, if before you take out a loan on both, you need to make sure you've got enough expenses outside of the payroll and all that other stuff that's reimbursed to make the EIDL loan, the disaster loan, make sense for you.
Yeah. So, you may have heard about this too, John, but, if this individual asks if my lender is no longer accepting applications, what should I look for in a new lender?
Well, I'd say make sure they're a member of the Greater North Dakota Chamber of Commerce. Would be a first good part. No, that's a business decision. Here's what I'll say. If they are already approved SBA lender, they're approved to lend in these programs. And then the SBA and Treasury is also working to add more lenders to it. But the big national lenders are working on this. I know some of them, I think I saw an article this morning that said Wells Fargo already ran out of money in terms of what they were allocated to lend. So I would suspect Matt and Eric and the team at GNDC have some ideas of who those good lenders are and can point in a direction of banks who are doing this lending either in your community or around the state. But in terms of what to look for a lender, that's a business decision, that I'd make with your accountant and whomever else is kind of in your sphere of financial advice.
So just a little recap here. So on the forgiveness of the PPP loan, if they use those funds to pay payroll early on, but still had to let people go in June or July, for example. Even though the initial purpose was for payroll, this person just asked, why would I have to pay that back?
Well, one important note: if you lay someone off in July, that won't affect your forgiveness. This is, you have to maintain employment through June 30. But the goal is to try to keep people on the payroll, to keep them connected to your business, and to keep them off unemployment. So if you have to lay employees off, your forgiveness is reduced in conjunction with that. The goal is to use those funds for those purposes. Now, if you lay somebody off, you're not penalized per se. You just can't have that turn into a grant and have that portion of it forgiven. So the very purpose of the forgiveness portion is to say, we want you to hang on to your employees and to keep them engaged. And they have kind of a short-term view on this in terms of June 30. I think similar to the dollar amount, they had to pick a date. I think they're hoping that by that point, by beginning of June, end of May, we'll have been through the worst of this and our economy will start opening up again. But if this continues to be as bad as it is now and lasts longer, there's a potential they go back in a future bill and say we need to extend that deadline out further, or change some of those deadlines and add more money, because that was kind of a somewhat arbitrary deadline, just like the dollar amount was somewhat arbitrary. But the focus of it is, how do you keep your business open, but primarily how do you keep people on the payroll? And if you want the loan forgiven, you keep people on the payroll, and if for whatever reason you have to lay them off or things get bad, then that portion of the forgiveness is dialed back.
Very good. So that's all the questions I am seeing here. If you have any last minute questions, please fill them into the Q&A. We have John here for a little while longer with us. One thing I'll talk about while we have a few moments here, so the chamber, we're going to try to host Tuesday calls like this every week, to dive down further into what's happening with the COVID-19 response. And next week, Ogletree Deakins, which is a law firm, they're going to be on, and they're going to basically talk about potential workplace impacts due to this. And we get a lot of questions on Fair Labor Standards Act in great detail, if I need to furlough employees, those sorts of things. So they're going to be here to dive in further into those questions. So hopefully you guys can join us for that next week. An email went out before this webinar started, just with information about how to sign up for next week's call. So I ask you to join us next week. So it looks like we have another question coming in here. So John, how long until the back end guidance is available on loan repayments or forgiveness, and how banks, SBA will want to substantiation for expenses paid with loan funds?
I suspect that guidance will be coming soon from the SBA. Obviously, they were focused very heavily on the front end guidance in terms of how do we get this money out and what are the procedures for that. And I suspect they're working right now on the back end side of that loan guidance, and I suspect that will be coming very soon.
And that'll come from SBA, correct?
Right, that'll come from SBA. And I'll say, there've been not a lot, but I've heard enough stories where there's, the Friday there was problems with lending and all of that, but for the vast majority, in terms of trying to lend out $349 billion, it's happened pretty smoothly for the most part. Now I'm sure there's every bank and every lender and every business out there has their own version of what the reality is. But when you think of how much and how quickly they turn this around in terms of being able to get $350 billion into the economy, it's moving pretty quickly.
Okay. Yeah, I mean, try to inject this much money into the economy at a flip of a switch can be difficult. But,
right. Yeah.
Yes. Well, I think that's all the questions we have. Things seem to be tapering off, but John, I really appreciate this conversation. I really appreciated the materials that came out of the U.S. Chamber and the work that you guys are doing. So appreciate your time today.
Thanks for having me. Thanks for all that you're doing. And if you or your members or anybody else has other questions, just feed them to Matt or Eric. They'll get them to me, and we will get an answer for you, or at least get you pointed in the right direction. But typically, as it relates to those PPP loans and as it relates to idle loans, the SBAs are going to be a resource in terms of those idle loans and a lot of guidance there, and your local lenders on the PPP. So I'd encourage you to, talk to your accountants and talk to your lenders in terms of what's right for you, and hopefully we can get that money in your pocket quick and keep your business afloat for when we're through this and everyone get this economy rolling again.
Yes, that's right. And we'll, U.S. Chamber and ourselves, we'll work to get those materials up, as guidance has come out and more materials, we'll make sure we get those on our websites to share so the business community has quick and easy access to them. So, but just going to do one quick plug again, next Tuesday, we'll talk about, workplace challenges you may be facing, as layoffs and furloughs are happening, and compliance with FMLA and the extended sick leave. So please join us next Tuesday. And as most of you probably are aware, on Thursdays, in partnership with the Department of Commerce, we host a webinar as well, to talk about challenges and things that are going on, new programs. So, it's really good to just have this information out there for our members and the business community in North Dakota. So thanks again, John, and appreciate it. And we'll talk again, I'm sure.
Thank you.
Yes, thank you.